Welcome student to our lessons, Financial Management Level 3. I am GP Mbokodo from Ehlanzeni College under Mlumati campus. Our Financial Management Level 3 consists of 6 topics. Namely, the first one is our value-added tax. Secondly, the wages journal. Thirdly, the salaries journal. Fourthly, the petty cash journal or petty cash system. Fifthly, the reconciliation statement. The last one, the asset register and the calculation of depreciation. Then our lesson 1 will be based on the value-added tax. The value-added tax is an indirect tax that is levied on all goods and services. Why we said VAT or the value-added tax is an indirect tax? Because our main aim is not, we buy a product and we find that on that product the price includes VAT. It is not like the direct tax that is deducted on the salaries and wages of the employees, because they are aware that they are paying a tax. But the VAT is an indirect tax. All human beings, the pensioners, the student, everybody is supposed to pay a value-added tax because we are buying a product daily. Then the value-added tax is categorized into 2 categories, namely the input VAT and the output VAT. The input VAT, it's a VAT that is paid by the business owner. Or we can either say the input VAT, it's a VAT that is charged by the supplier to the business owner. You have to note this explanation for examination purposes in section A. Then the output VAT, it's a VAT that is paid by the customers. We can either say the output VAT, it's a VAT that is charged by the business owner to the customers. It is also important to know the difference between the input VAT and the output VAT for examination purposes in section A. Then value-added tax nowadays or this year is calculated at 15%. All along, it was 14%, then it has been increased to 15%. Then it is using 2 formulas. We've got 2 formulas of calculating the value-added tax. The first formula is an inclusive formula. That means the inclusive formula is a formula where you have to calculate the price of an item that have got a VAT inside. Then the formula says the given amount multiplied by 15 divided by 115. Then you'll get the amount of the VAT using the inclusive formula. Inclusive means the amount that you have been given is having a VAT. Then the second formula is our exclusive formula. Exclusive formula. is where you have to calculate EVAT in the amount that is without EVAT. Then the formula said the given amount multiplied by 15 divided by 100. Then you get the value-added tax amount. We'll do more calculations when we wrap up this topic. Then a business owner is allowed to register for the value-added tax if the business earns 1 million per annum. Then per annum means per year. If the business owner earns less than a million per annum, is not allowed to register as a VAT vendor. As a VAT vendor is a business owner who is registered to collect EVAT to the customers. You must also note that because they used to ask to your exam under first session, what is meant by VAT vendor? A VAT vendor is a business who's registered to collect EVAT to the customers. Then the business owner is allowed to register as a VAT vendor if he or she earns more than $1 million per annum, not per month, but per annum. Then when a business owner wants to apply to collect VAT to the customer or to be registered, he must go to South Africa Revenue Service, SARS, and fill the VAT 101 form. The VAT 101 form is for admittance. After filling the VAT 101, then the business owner can now do EMA returns. It will be up to the organization whether the returns can be done monthly or after 2 months or after quarterly. Then by doing the returns, the business owner will use the VAT 201 form. The VAT 201 form is for remittance. You must also note the difference between those forms, what is used for. VAT 101 is for admittance, VAT 201 is for a remittance. Then the value-added tax is categorized into 3 suppliers, namely the zero rate suppliers, then the percentage of VAT under zero rate suppliers is 0%. Then the second one are the exempt suppliers. There is no VAT percentage under exempt suppliers. Then the last one, the third one, is a standard rate suppliers. The percentage for the standard rate suppliers is 15%. Remember, we have to apply those 2 formulas. Then, let me give you the examples of the zero rate suppliers. Firstly, the examples of the zero rate suppliers are raw fruits and raw vegetables. The raw fruits and raw vegetables falls under zero rate suppliers. The VAT is there, but it's 0%. But if the raw fruits can undergo a process of being a juice, let's say for instance, if you buy an apple, the apple is without VAT. It falls under zero rate. Once they process the apple to be a juice, then that apple juice will fall under standard rate because it has undergone the process. It is 15% VAT now. Same applies in the case of vegetables. Once they prepare the vegetables, there are vegetables that we buy it, they can't eat. Once the vegetables undergo the process, it falls under a standard rate suppliers. Okay, another examples of the zero rate are the eggs, then the maize meal, then the beans, petrol and diesel. Then there is no VAT. The VAT on this particular product is 0%. These are the zero rate suppliers. Let's go to the exempt suppliers. Remember, on the exempt suppliers, the VAT is nil. There is no percentage. Then the examples of the exempt suppliers are school fees, hospital fees, passengers transport, and the rent for accommodation. If the rent is for a building, is subjected to VAT of 15%. But the rent, if it is for accommodation, it falls under exempt. Then shortly, under exempt suppliers, we can say all those financial services that deals with man. Then we've got a limited number of zero rate suppliers and the limited number of exempt suppliers. Then it's easy maybe to know the exempt suppliers as well as the zero. The items that does not fall under exempt as well as a zero rate, it falls under standard. I can give you a few examples of standard rate suppliers. Water and electricity, then the stationery, then all the fixed assets. It can either be vehicle, furniture, fixed assets, or we can either set non-current assets and other expenses. Then I want us to do a little calculations so that we can apply the relevant formula that I gave you, the inclusive formula and the exclusive, just to calculate EVAT. Let's take, for instance, we have been given a statement like this. It consists of 3 columns. Here is an exclusive amount. Here is a VAT. Then here is an inclusive. Then they used to give you amounts and you have to calculate. Once they put the amount here, let's take for instance here we have got 20,000 rand. This is number 1. You have to calculate VAT. Number 2, we've got 300,000 rand. Number 3, we've got 350,000. We have to calculate the VAT there. Then number 4, or let's have the inclusive amount now. 400,000 rand. Then they said, calculate a EVAT. You must firstly remember the formula, as we have got the inclusive formula and the exclusive. As the amount appears here, it means these amounts are without VAT. You have to apply the exclusive formula. We've got the amounts here on this column. It means these amounts have got EVAT inside. If you calculate the VAT, you have to use the inclusive formula. Okay, let's calculate. Firstly, number one, we've got 20,000 exclusive of VAT. Because for examination papers, they cannot say calculate EVAT without indicating that amount is without VAT or is inclusive amount or is an exclusive. Always if they say calculate EVAT on those particular amount, they indicate that this amount is VAT inclusive or is VAT exclusive. Okay. Then let's take our calculator. Firstly, 20,000 is VAT exclusive. We have to apply the relevant formula. We have to say 20,000 multiplied by 15 divided by 100, because the 20,000 is VAT exclusive. Then it gave us the VAT of 3,000. If you want to calculate the inclusive amount, you can say exclusive plus the VAT, it will give us the inclusive amount. Then it will give us 23,000. To make sure that you are correct, you have calculated the VAT correct. You can also take the inclusive of 23,000 using the inclusive formula and calculate the VAT. You will get the 3,000. Okay, secondly, we have been given an inclusive amount of 300,000. Then they said calculate the VAT. As it is an inclusive amount, we have to use the inclusive formula. The inclusive formula, our amount is 300,000. Then we apply the inclusive formula of 15 divided by 115. Our VAT is now 39,130.43. As if they didn't indicate that you have to round to the nearest rand. You must also indicate the cent. We must have two numbers after a comma. Then if you want to calculate the exclusive, you can say inclusive amount minus the VAT, you'll get the exclusive amount. Then another amount is 350,000, and as it falls under exclusive column, it's without VAT. You have to apply the relevant formula of 15 divided by 100. Then you say 350,000 multiplied by 50 divided by 100. Our VAT is 52,500. Then if you want to calculate the inclusive, you can add the exclusive amount plus the VAT. It will give us the inclusive amount of plus 350 of 402,500. Then the last amount, we have been given an inclusive amount of 400,000. We have to calculate VAT, and we must use the inclusive formula. Then the inclusive formula says 400,000 multiplied by 15 divided by 115. Then our VAT or value added tax will be 52,173.91. If you want to calculate the exclusive amount, you can subtract the VAT from the inclusive amount part. Our main aim here was to calculate the VAT using those formulas. These are our VAT implications or terms or explanation. Value-added tax is an indirect tax that is levied on all goods and services. You must not forget that. It is categorized into two categories: the input VAT and the output VAT. You must also remember to differentiate the input VAT is a VAT that is paid by the customer. The output VAT, the output VAT is a VAT that is paid by the customer. The input VAT is a VAT that is paid by the business owner. You must also remember the different suppliers. As we've got three different suppliers: the zero rate suppliers, the percentage is 0%. The exempt suppliers, we don't have the percent because we don't calculate the VAT on the product that appears under exempt. Then get the standard rate suppliers is 15%. This is now the end of our first topic. Then we'll continue. The next topic will be based on still on VAT, but how to enter VAT on subsidiary journals. If you've got questions based on this lesson, you can contact us on our webpage at ehlanzenicollege.co.za, on Twitter at Ehlanzeni TVET, at YouTube Ehlanzeni TVET College. Thank you.